Forex analytical forecasts for New Zealand dollar US dollar and US dollar Canadian dollar for Friday, March 24th. New Zealand dollar US dollar, the New Zealander is going to win back its losses. New Zealand dollar US dollar demonstrates a moderate decline, resuming the dynamics of the bears, completing a brief rise yesterday, where the asset updated the local maximum of February 16, but the bulls quickly exhausted its potential. The negative factor for the pair reduction was the macroeconomic statistics released from the United States on the unemployment benefits claims. Thus, over the last 7 days on March 17 the initial claims fell to 191,000 from the previous 192,000, with analysts' estimates of growth to 201,000, and the number of secondary claims on March 10 strengthened to 1.694 million from 1.68 million. Just under the expected 1.701 million. Investors were disappointed with the housing market dynamics, which reflected the slowdown in new home purchases to 1.1% from 1.8%, with the market estimate of 1.6%. Meanwhile, at the end of the week investors expect to see macroeconomic data in the U.S. on demand for durable goods, as well as business activity in March from SP Global. Estimates suggest that capital goods orders outside the aerospace and defense sector will remain flat in February, having previously increased 0.8% in January. US dollar Canadian dollar pair is affected by contradictory factors. During the morning session US dollar Canadian dollar is moderately strengthening, recovering positions after a slight decline earlier, resuming a test of 1.372. The US dollar continues to trade under moderate pressure amid the released results of the Fed meeting on monetary parameters, in which the regulator decided to increase the interest rate by 0.25%, despite the negative sentiment of market participants regarding the situation in the banking sector. The accompanying letter from the officials noted the continuation of the fight against inflation, which continues to be well above the 2% target. In addition, participants confirmed the need to adjust the value in the short term, and based on the summary of economic forecasts, the median estimate of the percentage in 2023 will remain at 5.1%, and in 2024 adjusted to 4.3% from 4.1%. Meanwhile, investors agree that the U.S. regulator is in the final stages of a monetary policy adjustment cycle, which will gradually ease the pressure on the dollar, prioritizing real economic conditions and risks in the financial sector, which has already managed to show a negative reaction to interest rate appreciation.